Bosun, thank you for joining us today. Talk to us about this aggressive rollout at the next week's primary market auction. Why do you say that?
Okay, thank you for having me. What we witnessed currently this week, there was an auction on Wednesday where the stop rate on the long end, the 364-day B, came down by about 24 basis points. If you notice the previous auction too, we saw like 1 basis point from the long end. So the investors are seeing that yield actually compressing. So we've been seeing decline in the yield on the TB space and on the bond space. So the center stage for investors is next week when we have a bond auction, 50 billion each on 2027, 2035, and 2050. So at the last auction, the last bond auction, the 2027 closed at 13.1, 35 closed at 14, and 50 closed at 14.20. But because of this, the decline in yield and the decline that we've seen in the inflation rate, so the suggestion is that the yield will actually come down. So before now, we've seen some investors that have gone short on some of these positions. So aggressively, we saw interest yesterday. Most of the investors are actually trying to cover their short positions so that they don't actually make a loss. So at the next auction, we expect there will be aggressive demand from the investor to cover the short position that they have, and we expect the DMO to take advantage of this and sell more at a lower level. So the 2050 is currently trading at about 13.9 levels, which 35 is trading at 13.2. So the stop rate is set to close below 14% next week.
Now, one of the highlights of trading this week at the market is the inflation rate that came out. Help us understand how investors are processing that.
So we saw the impact of the decline in the inflation on the TB space. So we like I said, at the auction, the bid to cover on the 91-day was 5.7, while we saw 24.9 on the 364-day bid. So many people actually looking to actually invest because the decline in inflation means that the real return has actually improved a bit by that decrease in the inflation rate. So we've been seeing interest from investors. For the money market, the market is still a bit liquid, though transactions have been executed at 18-15% level. For the FX as well, we've been seeing CBN has sustained its intervention. On Monday, it injected, on Tuesday and Wednesday, it injected funds for the foreign portfolio investors. So they've cleared a lot of backlogs of the foreign portfolio investors' FX demand. And for the locals too, today, the result of the previous week retail SMIs, they will release it. So we expect that at least since they will inject at least $250 million into the system. So we've seen calm, and even if you look at the street market, the rate appreciated yesterday. So investor and exporters will be seeing flows too. So the market has been a bit calm this week.